folks, Scott here, and happy Halloween. Interesting day today. Before I get to that, let's talk about what tomorrow may bring us. Tomorrow is the first trading day of the month. It's also Friday, and if you followed me for a while and or have studied the videos in our monster database of video recordings where I do a daily wrap each day, and we've got the last 1,400, I believe, are in our members area, then you know that Fridays are often prone to being good shorting opportunities for fading the gap when it gaps up. You also know that shorting up gaps on the first trading day of the month is historically riskier than average. In fact, both are probably two equal extremes in those two respective directions that I just mentioned. So I thought it would be interesting and helpful to show you the results of fading gaps when you have both, when the first trading day of the month is on a Friday specifically. I'm going to ignore market conditions just to keep the sample size even remotely helpful, okay? Because otherwise it wouldn't be very helpful. Oh, there we go. All right. So several things stand out. Very small sample size, so not a whole lot can be accurately inferred here. However, when you see numbers this lopsided, it tells you odds are over the next 15 trades this number is not going to change a whole lot. There tends to be a bias for gapping up on the first trading day of the month, which is true, and it appears to hold true even when it's on a Friday. However, shorting an up gap on a Friday, which is generally okay, is not advised, at least hasn't been historically when it was the first trading day of the month. So it looks like the first trading day of the month, the bias may be stronger than the Friday bias. Now this is using an end of the day stop, not something I recommend, but a good place to start your analysis. And if you get rid of this one monster loser here of 12,500 on 10 contracts, which that's big, it's like 24, 25 points, then it's actually only slightly negative, but still looks like it's 50-50. So for me, and then a down gap, you just can't read anything into it. I will defer to our gap guides to make my final decision in both directions, but this is probably enough. The first trading day of the month risk is enough to give me pause on shorting an up gap, especially after 2 down days on the heels of a 200-day high close. And I just, off the top of my head, common sense tells me there may be some more bulls looking to gun this thing higher at the beginning of the month. And November is often bullish from a seasonality perspective. So tomorrow should be interesting. We'll see. All right, let's look at what the market gave us, or how it's set up coming into today. I'm going to show you our worksheet, or my worksheet, which I call the TGP, today's gap play worksheet. It's a synopsis, summation, average, if you will, of the 8 individual indices gap guides, as shown there. And for today, we had gaps down between the prior close, but above the low. So it was in this opening area here. And I believe it was a DCL zone for all of them. Prior day was down, we up between the close and the low. And you can see the average was very strong, 73% win rate and a 1.37 prop factor. Now this tends to be one of the better zones, but doesn't always set up nearly this strongly, and it was set up really well today. Unique day factors, down gap after Fed day is basically neutral. For some reason the database, and we double checked it, it was there, just didn't display properly. We should have shown down gaps, up and down gaps on the last trading day of a month. Because it wasn't here, I added in my pre-market comments. I'll show you that in a second, but it is a risk factor for down gaps in general, pretty significant or pretty clear. After a bearish outside day tends to be a risk factor also for down gaps. Widespread 7 tends to be a positive. So a little bit mixed. Let me show you my comments. Let's see, last night's video wrap after a bearish engulfing pattern went above the 10 and 200. You can see that. Not great. Outside day that trades beyond the highs and lows of the prior 2 days. That's a nuanced pattern. It was actually a positive. And gaps on the last trading day of the month went above the 10 and 200. Okay win rate, but weak profitability. So bottom line is, I sized it up saying the guides were generally attractive. Patterns were showing mostly risk for down gaps though. Another consideration was closing variance. And I added a lot of granularity here. And don't give me feedback. If this is too much and you're not digging it, tell me. If you like it, tell me. That's the only way I know, whether to continue doing or not. But I'm trying to share as much specificity as always, but Sometimes people say it's too much because I'm really threading a needle sometimes. Today was one of those days. Because of those extra risk and because the Globex price action was fairly large last night, I can't show it to you easily. I was concerned about getting a little weakness this morning before it filled the gap. Thought it was a pretty good gap fills opportunity, but I didn't want to get stopped out inside of the overnight range. So I decided to only go in with a small position at the open. And let's see. Actually waiting for 56.50 is what I was trying to do. But above it, I said if it was less than 58.75, which was less than the 4 p.m. close, but above 56.50, I was going to wait and go long at 56.50. Why? Because I want my stop, that's what I said down here, below the prior lows at 51.75. So 76.50 minus 5 points is 51.50, one tick below yesterday's lows. Then I was going to add to it if it got down to 54.50. That would get my stop more than 2 points below the prior lows and greatly increase the average size of potential win as well. Well, for a little bit of good news, bad news, or as I said in the title, both a little bit of a treat and a trick. Here's the price action in the ES. Filled at 56.50 long. First target hit at 60.5 for plus 4 or plus 16 ticks. My second target, extended target, was at 62 even. It traded at 62 even, did not fill me at 62 even, and thankfully since it traded right at my price, I was monitoring the trade and my proximity rule kicked in. I tightened my stop to entry and I was stopped back at 56.50. So ended up being a fairly small win, good trade, small win, didn't have any sell off. And one thing I will say, that my cautiousness was advised. See how it rolled over? Probe the lows. Sometimes these trades, it's hard to tell. I really believe when I'm getting pretty tricky is the wrong word, when I'm getting very specific in the nuances of executing the trade, and I'm not just trading it straight up, meaning right at the open like I normally do, that tells you I think there's an edge, but it's sort of a small one, so I'm going to try to make it a more clear and consistent one for me, because there's bullish and bearish pressures in play, and I want to work the situation the best I can. I don't know how else to say it. So, sure enough, not surprising that it rolled over and stopped me in the second half. Okay, so my caution was advised. It was a small win. It counts bigger than it was. That's good. 15-minute first hour range guide didn't show anything too compelling, though the first hour high breakout looked somewhat interesting. I opted not to do it because our advanced studies on the website, which are available for everyone, and many of our members have purchased them, show that there is extra risk for a high breakout on the last trading day of the month. That was a good decision. I stayed out of it. I was gone anyhow, but I could have set up a bracket order. Didn't do it. Came back from a dermatologist meeting, saw we'd bounced off the open. We had some weakness. As I've shown many, many times in our trading room, the last trading of the month often has weakness in certain situations. Today was one of those scenarios. So I went short straight up at 59. I added to the position at 58.50 when I realized we probably were going to go higher, and scaled out scaled out at 56 and a quarter for plus 2 3/4 points, and held the last part. I was targeting, there's a 600 EMA not showing on this chart. Let me show it from our trading room chart. Bear with me here. So this got a little bit more detail on the actual charts I use in a trading room. This is a 600 EMA. My target was 52. I called this out well in advance. I got short up here, and I nailed it today. Or markets were very gracious in giving to me on this part, making up for this reversal over here. So I ended up with 6.5 points from 58.50 down to 52 on that trade. Sweet trade, and they're not all like that, of course, but those were only 2 trades all day. They were overall very solid and good days. So we'll see what tomorrow brings us, but that is the wrap for the last trading day of October, Halloween. Have a great day. Take care.